Hey everybody, welcome back to ASX Market Watch. Thanks very much for stopping by and checking out the markets with me today. It's a great day to be checking out the markets actually, as good a day as any I do believe. It's the end of the week, and that means we get to check out where the week has gone, where the week has led us, where the world charts are going, and as I will tell you in our previous market watches, using the charts, the price charts. Now it's a great way to look at the world, especially to complement your own personal strategy, whatever you might currently be using. You might currently be using broker reports, newspaper articles, whatever you're looking at, the news, maybe you're looking at the fundamentals. Whatever it is, guys, the price chart is another great way to supplement your current trading philosophy. Now, let's get into it because, as I said, we're looking at the entire world. We're looking at Asia, we're looking at the Americas, we're looking at down under Australia, we're looking at Europe as well. But of course, where we're starting is down under Australia because that's that's where I like to trade. That's where I trade myself. Obviously, that's where I'm based as well. So that's where we're starting, guys. The All Ordinaries in Australia. Now, first of all, can I just say, this has been such an awesome week, and I have absolutely loved it. And if you will check out any of our previous market watches, seriously, guys, we absolutely nailed it again. It was really, really great stuff. What we've been calling, if you haven't watched any of our previous market watches, and if you haven't, please do, because it's just a great insight into how we got where we are, and why we called it the way we did, and how we absolutely nailed it, which is another beautiful thing. Okay, just really, really quickly, we got, last week we were saying these single bars here, they had really high opens, really long over during the day, they went down during the day, and then high closes as well. So we've got 1, 2, 3, 4, 5, 6, 7, about 7 of these bars, man, like a whole bunch of these bars at this same level at about 4,650 on the All Ordinaries, Australia. Now, what does that signal to you? It signals that buyers came in during the day and pushed the prices back up, and that's exactly what happened. And then when we ran out of sellers and we got a trigger like I was talking about, I think it was maybe 2 weeks ago or a week ago, I said we needed a bit of a trigger for the next move up. And what did we get? We got a trigger this week! How good is that? And what did we get because of that? This massive, massive up bar. Beautiful 2.5% move up in one day, and that potentially the highest probability move here from now, guys. Oh, one last thing as well. We also said that we'd find a high probability of support. My boxes never work. Sorry about that. Man, I wish they did. Well, but what I said was we'd actually be looking at support at the long-term trend line as well. And did we find support there? Well, it didn't reach it, but it definitely was supported around that level. So, guys, happy days. And I love it when we get stuff right in the markets. I love it when we call things correctly because obviously being a participant of the market, it means that I make money in the market as well. So happy days, guys. Can't argue with that, can you? It's great stuff. But where are we heading from now, guys? Now, oh man, there is one other thing that I really have to tell you as well, because obviously we've been looking at the markets from an Elliott wave point of view. Now, anyone who doesn't use Elliott wave, it's very simple. It doesn't have to be a complicated thing. Some people do make it complicated. I personally don't make it complicated, make it very simple. But what we're looking at is 1, 2, 3, 4, 5 waves up, guys, in any sort of move, according to Elliott waves theory, or Ralph Elliott, way back in the sort of early to mid 1900s, he coined this theory. So anyway, what we're looking at is 1, 2, 3, 4. We're basically heading into the end of the wave 4 right now. Now, this large move that we had during this week, over one day on the Thursday, now that has the potential to be the start of our wave 5, guys, just because of the strength of that move. Now, one of the rules according to Elliott wave that I really have to tell you quickly because it relates to all the markets and it's extremely exciting is now if our third wave, which is this one here, guys, and I might just get rid of this down trending line so that, yeah, there we go. That's a bit more aesthetic. So we've got our wave 3. If our wave 3 does not reach 161% of wave 1, which is that one, then one of the rules according to Elliott's theory was that wave 5, which is our last wave, will become the extended wave. Now, what does that mean for us? Well, it's actually it is a little bit crazy, and it's a little bit exciting as well. What it actually means for us is that if wave 5 becomes the extended wave, it will go between 161.8% and 261.8% of our previous move. Now that is a long way, guys. That's a big move. In fact, it doesn't even show up on our current chart. I'll see if I can. Surely it will somewhere. Well, we'll go the other way. Okay, there we go. Yes, obviously we've had our highs way back in the bull market, the end of the bull market, 2007. So the potential, if this wave, obviously, if this theory is correct, if this rule of Elliott's wave theory is correct, has been correct so far, which is always good. It could take us to 5,500. To between 5,500 and 6,000. Now, what is the other part of this, guys? Because what I've been saying again all along is Dow's theory moves in 3 waves. So obviously we've got, on a longer term, we've got our first leg up here. Now that's a renewal of hope. What that move is a renewal of hope. It means that people start to get a little bit hopeful about the markets again. This sideways movement is just obviously the market has to catch up. So the earnings has to catch up to where the price has gone. I hope that makes sense, and I hope I'm not sort of going too fast, but yeah, it's quite easy once you get the hang of it. So apart from that, guys, the second move of Dow's theory is something called company earnings. Basically, we've got renewed confidence here, and the second leg is when the company earnings start to come back into the mix, and we're already starting to see some good reports on the economy in the US, which is helping the Australian market, as it always does, and in Australia as well. We've got earnings period coming up early 2011. So around that time, we could potentially start to see the earnings start to come back into the market. That could be the driving force between this Elliott wave, extended wave as well. So guys, that's probably the highest probability move at the moment. Just as a safeguard, guys, like if you're looking at wave 5, and I'm sorry to go into this so much, but just so that you get the whole detail, your regular wave 5 in Elliott wave will usually go between 50% and 75% of wave 3. That would usually take us to 4,900 to around 5,000 level. So the 5,000 level has been a really strong resistance level in the past. So that's a high probability that the market will also find resistance at that level. But you know, like there's a lot of triggers starting to point to an extended move here. But obviously you've just got to be careful. Because in a regular scenario, we'd be looking at around 4,900 to 5,000, guys. So I know that's a little bit mixed up, but again, these things don't happen too often. So when they do, you've just got to be aware that they might happen. Obviously, if you get in early, which is what I've done here, this has been my trigger. I've started to buy again. Obviously, I've got my stop loss at the previous low. So obviously you keep your stop losses in, you use correct money management, guys. That's the main thing. Don't risk too much per trade, but obviously risk enough so that you can make enough money. There's a fine art to it, and obviously I go into it in my site as well. So that's something that you can check out at asxmarketwatch.com. And yeah, so that's the main thing. Get in early. That way, if the move does continue, then you'll be on it and you'll be along for the ride, which is the main thing, guys. So I've spent a heck of a lot of time on the All Ordinaries. Sorry about that, but it was actually really exciting. The Dow Jones is in the similar scenario. So you'll actually find that the Dow Jones could move between if I just, as you can see, it's sort of moving out of its wave 4 as well, potentially now, and exact same thing with the Dow Jones. Again, we called it perfectly. We said we were looking at a sideways, sort of sideways movement over the next couple of weeks, a couple of weeks ago, and that's exactly what's happened. And why did we say that? Because it was consolidating around previous highs. There's that line there. And again, if you didn't get that, just check out the previous ASX Market Watches on YouTube. They're there, or on my site, asxmarketwatch.com. Potentially on the Dow Jones, we could be seeing 11,600 to 700. We've been saying that since the beginning, guys, so that's awesome. I think that's where we're heading at the moment on the Dow Jones. Again, if it does become the extended wave, guys, we could be seeing somewhere around the 13,000 mark. So that's a massive call, and I don't think anyone else is actually making that call at the moment on the Dow Jones. People are still talking doom and gloom. There's a lot of sort of people still talking about that, about the economy going the way of the buffalo, or sort of not going in a too good a direction, in other words. However, that's one of the potential calls, according to Elliott Wave, is at 13,000. As I said, I don't believe anyone else is making it. And again, if you get in early, which is what I would personally be doing, these two bars here, if I just enlarge these, big strong bars, they start low, end high. They're called bullish up days, guys. And that would be, that's a great trigger, like especially if it breaks out of a range, which is what it's starting to do. And our stop would be at the bottom of the trough there. So again, get in early. Obviously, if you do get in early, then you don't have to risk as much to get just as much as reward on the upside. And again, if it does take off, guys, then you're along for the ride. And that's the main thing. All right. How good is this stuff? This is the FTSE. Just really, really quickly, where did it find support? At the trend line. That's awesome. And again, that's something that we said. So, you know, happy days. Everything that we've said has been really coming to fruition, which is awesome. Again, the FTSE is starting to move out of the same ranges as everyone else. If you wanted to be safe, you could wait until a break above 5,900 on the FTSE, just because they've got their issues, obviously, with all their nations falling over. Not a good thing. The FTSE, again, could potentially go between 5,900 and around about 6,100 on the FTSE. Again, if you were to see the extended move, which is one of those things that I'm calling, you know, it's one of those things that can potentially happen here, guys. It's very exciting. 6,800 would be the call on the FTSE if that was to occur. Last but not least, let's check out quickly the Shanghai index as well. In China, we usually look at the Hang Seng. Oh, heck, we'll look at the Hang Seng just quickly. Obviously, the Hang Seng is still in its corrective move. I personally think that we could be seeing a move up to around 24,000 and then a move down to our 22,000 level. 22,000 is the strongest level of support here on the Hang Seng. Just a little zigzag pattern down is what I'm personally expecting there. And obviously we're still in a corrective phase on the Hang Seng in Hong Kong. Last but not least, Shanghai in China. Beautiful. Where has it found resistance? At the trend line. Where has it found support now? At the trend line. Guys, if it breaks down below 2750, 2750, then that would be a very bearish signal on the Shanghai composite. Until then, we're sort of seeing a bit of a sideways range, and hopefully we will continue upwards. Obviously, it would need a breakout above 3,000 or a breakout below 2,750. So bullish or bearish scenarios there. Guys, how good are the markets? I am loving this at the moment, and obviously it's great when we get things correct. It also means a bit of money in the bank, which is always good, especially a lot of people are struggling out there at the moment. It's good to have a discipline that you can fall back on if you need to, and especially if you tend to be fairly good at it, like we're getting a lot of the calls correct at the moment. Guys, it's great to have you here. I cannot wait to share with you more stuff next week, because it's just great to have you here chatting about the markets and have someone to chat about the markets with as well. Happy trading until next week, guys, and I will see you then for more ASX Market Watch. Bye for now.